Welcome to the Big Money Questions show. I'm Rachel Rickard-Strauss, Personal Finance Editor at This Is Money. This week, what is an ISA? We have James Norton here. He's going to tell us. He is Senior Investment Planner at Vanguard. James, thank you so much for talking us through this.
Thank you. It's nice to be here.
Can I ask the big question first off? What is an ISA?
Good question. Good place to start. In essence, an ISA is very simple. It is a tax wrapper. It's like a pension, and it sits around your investments or cash. You can do a number of things with it, which I'm sure we'll go on to, but it is a wrapper that houses your investments and enables you to grow your wealth tax-free, effectively.
So, in a sense, it's not a specific type of investment or anything itself. It's just something that goes around other things to keep it tax-free.
Absolutely right. It's a shelter. You can put all sorts of things inside it. You can put in cash, you can put in shares, you can put in funds, you can put in fixed income investments. The ISA itself is just a wrapper with an allowance, and how you use that is, broadly speaking, up to you within the rules. Okay,
so tell us a couple of the big headline rules then. What do you have to remember with them?
So the big rule, I guess, is the annual allowance. You have £20,000 you can put in any tax year for an adult, and that can either go into a cash ISA or a stocks and shares ISA. Those are the two really big types of ISAs.
So they're the most popular, cash and stocks and shares?
They're the most popular, and in the 2016-17 tax year, over 60 billion was invested in them.
Okay. Let's talk about what it means when you say that they're tax-free.
Okay. So what it means tax-free is any growth you get on your investment, if it's stocks and shares, is tax-free. So if you invest £5,000 and it grows to £10,000, you don't pay any tax on the gain you make on that £5,000. Also, the income that the investment generates is tax-free. Now that could come from two sources. If it's an equity-based investment, that's going to be that's shares in the stock market. That will generate dividends, and those dividends you're not going to pay any income tax on. Alternatively, you could have fixed interest holdings. Those are bonds. That's debt in a company, and that generates interest like cash. That's tax-free as well. So you don't pay any tax on the income or the gains. For a cash ISA, it's very straightforward. It's the interest that's tax-free.
Okay.
That's the starting point. Other points to note on the tax side of it is when you take money out of the ISA, you're not going to pay any tax on it, so it's incredibly simple. And a fairly new rule that's come into force in the last couple of years is on death, you can actually pass your ISA to your surviving spouse or civil partner, and they will inherit that as well, so the benefits go on for longer.
So we've talked about cash ISAs and stocks and shares ISAs. They're the two most popular types, but then there are all sorts of other ISAs as well, and there seem to be more and more. So tell us about those.
Absolutely. ISAs is a very trusted brand that was inherently very simple. A lot of people preferred them to pensions because pensions have this complexity surrounding them. However, ISAs have also got more complicated as well over the years. So you've got the two main ones, as you said, but you've also got Help to Buy ISAs. Those are actually being phased out in the next year or two, and they've been sort of replaced by LISAs, which is another one that investors need to get used to. They've got a dual purpose.
A LISA is a lifetime ISA.
A lifetime ISA, thank you. They've got two purposes. They can either be used to help fund a mortgage for your first property purchase. If you're not going to use it for that, then it can be used to help for your retirement income. But it's restricted on who can invest in those. They're only open for 18-year-olds to 39-year-olds. But if you've got one open, you can continue to contribute to it until you're 50. So lots of complexity. There's also innovative finance ISAs, which I don't believe have gained lots of traction, but that's for investments like peer-to-peer lending and crowdfunding.
How many, I mean, they sound great. How many can I have? What if I want one of each? Can I have stocks and shares, a cash and innovative?
Yeah, you can do that, but you're restricted to the £20,000 allowance in the year. Yeah.
So, and I can divvy it up any way I choose?
Yeah, yes, you can. However, the amount that can go into a LISA is restricted. You can only put 4,000 a year into that, and then the government tops it up with an additional 25%.
Okay. If you don't have any at all, where's a good place to start? Or does it really depend on what your individual circumstances are? Are there any kind of rules of thumb?
The rules of thumb are it's personal to you, and it depends what your goals are. This is where kind of understanding about your objectives is really important. If you're looking to do something for the short term, maybe buying a car or something, or saving for a holiday, cash is going to be a suitable investment for that. You can't afford to take the risk. However, if it's a long-term investment, then investing in stocks and shares is going to be suitable. Most people generally say 3 to 5 years is a minimum period for that, though.
And when you decide to do that, what's your first move? I mean, do you have to literally go out and buy stocks and shares and make sure that they're in this wrapper, or what's the process?
So you either go along to a financial advisor or go along to a platform, and those platforms have a range of ISAs. Well, no, they've got an ISA available on it, and you can choose the investments that will go into it.
What about the alternatives? Are they always the best option, or are there times when you're better going for just a plain old savings account? Let's start with that one. So in the case of just a normal cash ISA, is a savings account ever just as good?
I think what's interesting about ISAs is they are for people who want to save, who want to make money, and actually the government wants people to save and make money as well. So they're expensive for the government. I think in 2016-17 the tax relief cost the Exchequer something like £2.6 billion. So if you can do something tax-free, it is essentially free money to you. Any sort of cost, and tax is a cost, eats away at your return. Where you need to be careful is, in theory, putting money in a cash ISA is better than a current account. However, you need to look at your rates very carefully, because you're not always going to get a better rate by being in a cash ISA as opposed to another account. So you do need to look at the headline figures.
Okay, and the same with a stocks and shares ISA?
So the advantage of a stocks and shares ISA as opposed to investing outside, absolutely. I think a stocks and shares ISA is a great place to start, because we've talked about the tax benefits of that, and if you don't have those tax benefits, it's a real cost for you. However, it's not just that. An ISA in itself is just very simple. It means you don't need to worry about filing things on your tax return. So it takes a lot of the complexity out of it. I know a lot of investors are worried about tax returns and what they need to do with them. So I think it's a very sensible place to do it. So if you're starting off investing, it's a great place to start. You don't need a lot to put into an ISA. You can start with £100 a month or less, and that really builds up over the long run. When
you say or less, I mean, really, what's the minimum?
Again, you'd need to shop around, and I don't know what all the providers do, but you can probably find it for £50 or even £25. I'm not sure. Mm-hmm. So okay. They're also very good for high net worth investors as well. So if you've got a married couple who invest £20,000 each, that's £40,000 being sheltered tax-free. If you've got children as well, say 2 or 3 children who can have a junior ISA, that could be another £12,000 for 3 children, or just over. So that's sheltering £52,000 in 1 year. So it works for small investors and also high net worth investors.
And we've started to see the first ISA millionaires the last few years, right?
We've actually seen ISA millionaires for quite a while. back in the technology boom, a few people who picked the right shares did very, very well. I don't think many of them actually got out and managed to sell their investments in time. But I don't know what the numbers are, but if you started investing into a PEP, a personal equity plan, which was the predecessor to an ISA, and then contributed to an ISA year after year, you could have a very, very substantial sum saved. And I know there are a large number of £200,000, £300,000, £400,000, £500,000 portfolios out there which are growing tax-free, which is a huge benefit.
Yeah, because when you start out, it can seem like the tax benefit is not that substantial, particularly when we're talking about cash ISAs, because of course we have an individual savings allowance, so
Correct.
you have to have a fair amount of money to pay interest anyway on your savings.
Yeah.
Which sort of, it did lead many people to question, why do we need ISAs at all? But longer term, it makes a difference, right?
So I think that's a good point. If you look at ISA subscriptions in the last year, almost 80% of them were in cash, and I think that figure's been reasonably consistent over time. However, if you look at the amount of money in the stocks and shares ISAs overall compared to the cash ISAs, stocks and shares ISAs are now worth more than cash ISAs because of the growth. So that's a benefit that has accrued to investors over many, many, many years. I talked about a small investment of £100 a month. For some people, £100 a month is going to be an awful lot of money and they won't be able to afford it, but a lot of people will. And if you can invest that amount year after year for 30 years at a 6% return, which is probably reasonable, that could add up to £100,000. That can change lives, and that's the benefit of compounding, plus the tax benefits.
Sounds pretty good.
I think it is very good.
James, thank you so much for talking us through that, and thank you for joining us for the Big Money Questions.
Thank you.